and welcome back, wolves, to another podcast. Wait a second. I'm just joking. Of course, you will see me, wolves, and welcome back to another vlog. Today we are talking about Google and the earnings that crashed and smashed the market expectation. Like, you should smash this like up button right now. So let's dive into it. And my next guest on the show, Google don't need any introduction at all. We are using it daily to search the internet and access any information in the entire world that is public on the internet within a second for free. And this is something I always wanted to do, is, for example, ask Google, hey Google, how to hide a body in New York. Yeah, this is actually what I wanted to always know. You know, so you see that you can ask Google anything and Google will answer anything. So very, very funny. But behind Google is one of the biggest companies in the world. They are into ads. They are into other things like AI. They are your best friend on your mobile phones, which they pay a lot of money to, which we will see in the earnings. What else is to say more to Google? I think that's pretty much it. I mean, they are also developing one of the second or the most successful, most spread operation system for mobile phones. Android is also Google. YouTube is Google. You know, we are all Google. So let's go to Q2 earnings beat. So if you have already looked into the numbers or you haven't, I did it for you. I listened to the conference call, of course. So here are the most important numbers to know. Earnings per share reads like butter is melting in your mouth. It's almost or more than $14 per share versus $11 per share expected. This is huge beat on the earnings side. Then the revenue was also almost a $1 billion beat, slightly above $800 million. So than expected. It was 38.94 billion versus 38.15 billion expected. And traffic acquisition cost, and this is one very interesting part of Google, was 7.24 billion, which was lower than expected of $7.27 billion. And actually this traffic acquisition costs are Google's payments to companies like Apple to use Google as the main and default search for all their phones. You know, if you are taking out your iPhone and you're typing in something to search something on the internet in your Safari browser, or as a main default, the Google are used, and Google is paying billions to companies like Apple because Apple has such a big market share of the smartphone. So with Android and with companies like Apple, which they're paying for the traffic acquisition costs, they have a huge market share of the mobile search worldwide. So the CEO of Google, Sundar Pichai, he actually said that the cloud business, which is very important for Google in the future because it's one of the most growing areas of Google and also companies like Amazon, he basically saying that its revenue run rate was already at $8 billion. And this is a very, very good point. And also Alphabet said that the revenues from other bets where they have AI, they have companies like Waymo, which is something like, driverless cars and so on. So all the moonshots a couple of years ago that can be big things and part of the revenue of Google. This is also what I really like about Google. They're looking into different industries already because, you know, they are huge and the biggest in ads, but how this can be sustained for long we don't know, but what we know, and if you don't know, now you know, that revenue business is growing almost 30%, such a big increase, 28 to be specific. I have real respect for such big growth numbers in this big companies, because, you know, if you're looking back into the stories, big companies like Ford and all these other companies, they cannot hold this growth numbers. So, you know, these companies, it was being so big, the biggest companies in the world growing so fast and so constantly over the last years. It's really remarkable. And this is what I love about FANG stocks. I will make also another vlog about FANG stocks itself, because it's such an interesting topic. I love tech, I love FANG, and if you like them as well, I have a book. This is not paid advertising, by the way, but if the author of this book will listen to that, maybe, you know, wire me some $50 over, alright? So a book that I wanted to show you guys is following. And it's by Scott Galloway, and it's called 4. And it's talking about Facebook, Google, Amazon, and Apple, how they can basically rule our life, what they are really in the core business, what they are doing with us, with our brain, with our body, with our society, everything. Very interesting book. Have a look. Another, you know, very important thing that they're saying, that YouTube is again, so thank you, YouTube, another second largest contributor of revenue growth, and they are very pleased that, you know, it's such an ongoing momentum for the company. It was one of the best decisions to buy YouTube. You know, YouTube has huge potential as the biggest video platform in the world. You know, such a good move by Google to buy YouTube for just, you know, a laughing amount of couple of billions of dollars a couple of years ago, and now it was worth a lot of money. You know, I would estimate YouTube at least for $100 billion at least. So very good purchase. And also, you know, now we're seeing the US government is getting slowly concerned about the growth of this kind of companies, and also Google, same like Amazon and Facebook, needs to go in front of the Federal Trade Commission and stand and explain how they price structure their ad sales to consumers, and how it's not, you know, adjusted to the competitors, so the consumers has actually a fair choice between the options out there, because they have such a big market dominance between these two, and Google is the biggest. So let's see how this involves. Very interesting. So let's dive into the stock and the future of Google. So after reviewing the numbers, of course, you know, what is important for the future of Google, and you will know right now after, if you're new here, subscribe to this channel, because I'm seeing it right now. And if you are back or also new, hit and smash the thumbs up button. This will help me to grow into the YouTube algorithm and make daily vlogs about finance, money, business, and stocks. So the ad business for Google is just such an important part of the business. You know, it's making so much growth still today. But, you know, they have to be really careful that they have to grow more and more to justify and to make their shareholders happy. So it's important to grow this number. You know, this was really fantastic numbers. You know, the capex is getting lower, the revenue increased 30%. So unbelievable in this kind of environment and size. However, you know, I believe that Google, its core product is very, very strong. You know, I can imagine a life without Google, or go to a competitor, which would be a big jump into the quality, I think, you know, but there's lot of companies coming up in the FANG community. Also Facebook is coming up, you know, with getting a piece of the cake of ad revenue worldwide in their internet business, what is the core business of Google. And also Amazon is starting as well, and Amazon is going very aggressive into markets. So let's see how this play out. The stock is currently at 1,200 $45 US for one stock, you know, so you have to dive deep into your pocket to buy just one stock. You know, a stock price has never something to do how much value a company. It can be that, you know, there's Warren Buffett's Berkshire Hathaway. They are having one stock as more than 300 or 200,000 US dollar for one stock, but the market capitalization of Google can be much, much more. So the market cap, speaking about it, it's 863 US dollar, and the PE ratio is under 30, actually 28, which is quite interesting for such a company with such a growth rate. If we're going into the PS ratio, it's about 6, so it's, for me, it's a little bit too expensive, but you know, you can decide for your own. If you are in this stock, I think you should hold it. It's a great investment. If you're looking for more growth and more potential, that's interesting stock, but I think there's better around it. However, Google stays in our lives. Don't forget, the grass is greener on the side. Enjoy some of my videos and see you tomorrow.